Welcome to Dentists, Implants, and Worms, helping you navigate the world of dentistry one vodka soda at a time. And now, your hosts, Dr. Justin Moody, Gabe Olson, and Jeff Smith.
Welcome to another episode of Dentists, Implants, and Worms, helping you navigate the world of dentistry one vodka soda at a time. We are live from downtown Rapid City, South Dakota, and Studio 1A here on Columbus Street. My name's Justin Moody, and on the right, I have the steady Gabe Olson. And on my left, I have the pasty gangster, Renaissance
Millennial.
Yeah, Jeff
Love
Smith. This is the first podcast back from our trip to Ecuador. You may hear more about that. We may just have to do a pod on that.
I think we're just going to have to just spend an hour and just kind of tell it, because there's all kinds of stuff on that one.
Right. So, yeah, not too much time. I do want to thank our sponsor, our one and only sponsor from the beginning.
Yeah.
How many episodes are we at the pasty?
Episode 120.
Really? 120 episodes in. Boyd's Wine and Spirits on Mount Rushmore Road has been there.
I could tell you firsthand, if you need a motorcycle picked up off your leg, Boyd's Wine and Spirits was there to help lift it off, so it was a good trip.
Let's have a moment of silence for Scotty Vincent and Boyd's Wine and Spirits.
Yeah, he could keep his sponsorship money this month. I'll cover the tab.
Yeah, you'll pay full price.
Yeah, for sure. So if you're in need of a tasty adult beverage at a absolute rock bottom price, Boyd's Wine and Spirits, Mount Rushmore Road, right here in Rapid City.
Or if you knock a motorcycle over in your garage and you need help, give him a call.
Give Scotty a call. He'll come running. We've got a great show for you today. Since we've just kind of gone through tax season, I think there's a lot of pertinent information to bringing on a CPA to talk about dental tax strategies and so forth. We're lucky enough to have Craig Cody on the show. Craig, thanks for coming on.
Well, thank you very much for having me. I'm psyched to be here.
Yeah, absolutely. So, tell us a little bit about yourself. I was reading through here. You got some New York stuff going on. Maybe you've been a police officer for a while. Give us the rundown.
Okay. Well, the rundown is I'm a certified public accountant as well as a certified tax coach, a business owner, a former New York City police lieutenant, was in the police department for about 17 years. I started my business about 15 years ago. I became a certified tax coach about 5 years ago. We work with business owners. We work with a lot of dentists. The difference between a certified tax coach and your typical accountant is most accountants are real good at putting the right numbers in the right boxes, but it ends there. We like to take a proactive strategy, look forward, and see where we could help our clients keep more of what they make.
Wow.
That helps.
Yeah, sounds good to me.
It's not the worst thing I've ever heard of.
I also co-authored an Amazon bestseller, Secrets of a Tax-Free Life. And I recently wrote 10 Most Expensive Tax Mistakes That Cost Business Owners Thousands. And we're in the process of our third book, which is the 12 Most Expensive Tax Mistakes That Dental Owners Make.
Going after us dentists. All right.
What makes a dental office slightly different than your average, car lot, retail store as far as tax go? Why does dental end up being just slightly different than those?
Well, and what we've seen is typically there's a lot of equipment that they're buying that a car lot would buy too. Mm-hmm. Maybe dentists are a little bit more into their taxes and what they're paying and seeing what they can save. But we've seen a couple of different things that we say, like leasehold improvements not properly being accounted for, wrong entity choices with dental practices. Those are two of the big ones.
Well, let's
so that I
want to dive into the entity part first, because we have a lot of young listeners. Some of them are trying to get into dental school. Some of them are in dental school and trying to get out. And some of them have been out for a couple years. And one of the things I do hear, not only from my own associates, but across the board is, what the hell am I supposed to be? Am I supposed to be a PC? Am I supposed to be an LLC? Am I an S Corp, a C Corp? Can you do a little explanation of those items to us?
Yeah, sure. Well, typically you're not going to see a C Corp, which is basically 2 levels of taxation, so it doesn't make sense. More often than not, we see LLCs, sole proprietorships, or S corporations. So sole proprietorship is, you just basically you have no protection. You're set up as a business, and everything shows up on your tax return. You've typically done no planning at all. Then you have an LLC or a PLLC, depending on the state, which is a professional. The big difference there between a corporation and an LLC is self-employment tax. So in a corporation, you have to take reasonable compensation. Everything above that flows through to your tax return on a K-1, and it's not subject to FICA tax. It's also not subject to the net investment tax, which is about 3%. So everybody's situation is different, depends on what their practice is like, what other outside income they have, how many partners they have, are they adding partners, are they not adding partners? So that's where the difference between an LLC and an S Corp comes in. And what we typically see is there was never any planning that went into that. They went to the attorney, and the attorney liked LLCs for liability reasons, and they formed an LLC. The wonderful thing is if you are an LLC and we determine that it makes sense that maybe you should be an S Corp, we can make it a late election and to have your LLC taxed as a S Corp. Kind of the best of both worlds.
I may have went down that route at some point. So I think that's good advice. I remember getting out of dental school, and I think I've said this a few times before, and I remember one of those senior classes, 1 hour once a week, they got economics of dentistry, and they're just like, hey, when you get out of school, you need to find a tax plan, or you need to find a tax accountant, you need to find a good lawyer and a financial advisor. And I was like, well, I've never done anything other than a 1040 EZ that I've been able to do myself. And, I haven't been in any trouble, so I don't know what the hell I'd need a lawyer for. And I've got like $20 in my checking account, so I certainly don't need a tax or a finance planner. Today, between my CPA and my attorney, I don't really make any decisions based upon my business without consulting them.
Yeah.
So I think that this is very timely for you to come on, especially as these new grads are entering the world and trying to figure it out. One more question on that. This is a question I get quite a bit from associates is, when they're looking at contracts, sometimes associate dentists are 1099 employees, which would, I presume would have to pay for their own taxes, or they're full employees. Is there an advantage or a disadvantage to either one of those, in your opinion?
Well, yeah. I mean, as long as you could pass the hurdle of being an independent contractor, which I would imagine most could pass that hurdle, there are definite advantages of being paid on a 1099 or through your own entity, where you're able to offset some of your income with certain expenses that are allowed.
Elaborate on that a little bit.
Well, let's just say you're an independent contractor and you operate out of your home. And you do all your paperwork for your business out of your home. You go into a different dental practice twice a week. So there's certain costs that are involved in the administrative part of your business that you get to write off part of your home. Okay, if you have a home office, you could actually deduct your travel from your home office to where you're working that day. If you have a home office, you could have a home athletic facility. An athletic facility can be your gym. It could be your pool, as long as it's for the use of your employees and their families. So there's a whole host of ideas that open up once you have that home office.
How about a car? Can I write any part of my car off?
If you're using it for business, yes. So there's a whole host of things that go there. Then you get into the whole entity selection. If you're doing work for a dentist or two dentists, should you be structured as an LLC? Should you be structured as a corporation? Should they pay you a corporation? Which opens up a whole bunch of additional planning opportunities.
Wow. I think that's great news because we were just talking to a dentist the other day that was like, I'm going to be a 1099 employee. Like, I'm going to have to pay my own taxes and this. But, I kind of told him like, hey, listen, maybe you ought to think about it a little bit differently, kind of like what you just said.
There's opportunity in there too if you know what you're doing.
Right. The problem is so many people, in that age group and such are really just interested in getting their check and not worrying about anything.
Sure.
Or let's just get it done so I don't have to think about it.
Right.
Well, and I would have to guess, though, too, on a 1099 doctor that's working as a, junior associate, maybe he's making $150. I mean, is this a $3,000-$4,000 tax bill at the end of the year to have the accountant figured up? Are you going to save in taxes more than what your accountant's going to be? I mean, at some point, there's got to be a little bit of an ROI on what you're doing. Now, when you get to the bigger incomes, that percentage difference is probably pretty substantial. It's not as big a deal, but...
Yeah,
right. I would say on a doctor like that, we would want a 300 to 400% ROI on the first year. So, and that's what we would expect.
Oh,
so.
Well, that makes sense.
I'm just making that, but so if you charge $1,000, you should be able to save them $4,000 in additional taxes.
Listen, if I could only save them $4,000, I shouldn't be having this conversation.
Well, I like the way you're thinking here. I like it.
All right.
What if you were to let's take the top 3 tax mistakes that you think dentists make. What would those be?
Well, number 1 would be failing to plan. Like the guy just says, give me a W-2. Takes into account no planning. What can I do if I am self-employed? What do other businesses do that they're self-employed? What can they save? So that's the biggest thing. People spend a lot more time researching what kind of car they're going to buy than what type of entity or how they should be structured. That's the number 1 thing. We talked about the wrong business entity. We have maybe the wrong retirement plan. Should you have a home office or not have a home office? What can you do with that home office? So when we're talking about the associate, those are some of the big things that pop up.
Gotcha. What about as an owner? Is there differences in owners? I mean,
when it comes to being, the owner and the guy that's on the hook for the practice, you have all the improvements that you do. I can't tell you how many times I've seen dentists that have bought practices and, they purchase it and they have this goodwill that's an accounting item on the balance sheet and nobody's ever amortized that or depreciated or in layman's terms, expense that amortization. Then we have the dental owner that owns the building. Okay. Have they looked into using cost segregation to increase the amount that they're able to depreciate in the earlier years versus the late years? So what cost segregation does is typically your commercial building is depreciated over 39 years, but there's equipment in there that might be depreciated over 5 or 7 years. So when you do a cost segregation study, you break out 3-year property, 5-year property, 7, 10, 15, and you depreciate that property over a quicker period of time, which increases your depreciation in the earlier years. So the more I could save today, the better off I am down the road.
Gotcha.
What about just adding equipment? I mean, I'm always kind of curious as to... some guys seem like clockwork. Every year they're putting a little bit of something in and trying to keep it up, and you got other guys that just will skip equipment forever and then just do this huge, big remodel with a one-time big expense. Is there any advantage one way or over the other?
Well, I mean, if you buy equipment every year, that means you get to write off more every year. There's a couple of different ways to depreciate equipment. You could depreciate it, all at once under a certain code section. You could depreciate it over a number of years, or you could depreciate it under something that's around temporarily called bonus depreciation. So you have to look at your numbers and see what makes sense at the end of the year. Where do you get your biggest bang for the dollar?
Any difference between doing like a lease versus buying when it's equipment? Is there any tax advantage one way or the other?
Well, typically when you see a lease in a dental practice, it's lease to buy or lease to own. So it's a small buyout at the end. So it's out. It's calculated the same way as if you purchased it.
Gotcha.
Do you think dentists overpay in their taxes?
Yes, I definitely think dentists overpay on the taxes. Not purposefully. Okay, they don't want to overpay, but for most CPAs, most accountants, tax planning is sitting down in December and figuring out, okay, how much am I going to owe? What's that estimated payment I need to make by January 15th? That's what most people consider tax planning. Whereas what we like to do is we look forward and we see what can we do a little bit differently and generate those tax savings. And communication is key. That does just happen in December. You got to work throughout the year.
Is there any restriction? I mean, we're in South Dakota. I'm guessing you're in New York. I mean, can you work across state lines? Does it work that way in CPA, or do you have to be licensed in each state, or how does that work?
Okay. So we have clients across the country. Obviously, you need to be aware of the different rules in each state, which varies slightly. But I have a network of people throughout the country. The only thing you need to be licensed to do is if you're going to audit or review financial statements. That's where you have to be licensed by that state.
Gotcha.
Which doesn't come into practice that often.
Well, give us a few proactive tax planning things. Like, what can we do as a dentist to be proactive about planning for our tax liabilities?
Well, you need to communicate. Let's see what your salary is. We use a reasonable compensation study to see, how much time are you spending in your practice? How many days a week are you working? What are you doing during that time? And breaking that out to see what reasonable compensation is. Because if I could take that money that's not subject to FICA tax and save 15% on that, even if it's $20,000 or $30,000, it's some money I keep. It's also not subject to the net investment tax. Do I do work from home? Should I have a home office? Can I write off part of my home expenses? So if you have a room that takes up 5 or 10% of your home and you're doing all your administrative tasks from there, that means you get to write off 10% of your utilities, 10% of your maintenance. You get to write off your 10% of your mortgage and 10% of your real estate taxes, which doesn't sound like a big thing, except for when it comes to alternative minimum tax. Real estate taxes, depending on your state you're in, are an add back for alternative minimum tax. So sometimes it helps to move that to the front of the page versus the back of the page.
Explain again. So you would say that the home office is in it's a percentage of the square footage. Is that how you figure it?
Yes. So say you have a room that you use that makes up 10% of the square footage of your home. And that's, you just use that for administrative stuff. You don't, watch TV in there. You don't, entertain in there.
Right.
Then you get to deduct 10% of those expenses of operating that house on your tax return. And normally we set up what we call an accountability plan to take care of that. And what that is we figure out what the number is ahead of time. At the end of the year, you need to provide those receipts for the checks that you've received, so it's deductible to the business and you don't have to pick it up as income on your personal return.
All right. Now, I'm asking for a friend.
Okay.
I'm asking for a friend. Say a friend had bought a snowbird winter house in Scottsdale. And it had a nice home office, and they owned a group practice, and they did the admin for the group practice out of that office while they were snowbirding in Scottsdale. Does that still fall under that? I mean, how does is he tracking the right way there?
Well, definitely for the time period that he's down there, it counts. I'd have to look to see whether the time that if he spends 6 months there, or does he spend 3 months there? Does he spend the whole year there?
Well, if
South Dakota winters are pretty long.
well, I'm asking for a friend.
Oh, right.
So that's something that I would research to make sure that if you took the whole full 12 months, it was pass the sniff test. We always want to pass the sniff test.
Yeah, because I think there's a 6-month thing because say this friend practiced in a state that had no state income tax, and Arizona does have a state income tax. One wouldn't want to go over that residency line, for the state that had a state income tax. So
no, you don't want to get tripped up by that.
Yeah, no. So I'm just asking for a friend. Anyway,
a friend on East River, South Dakota.
How many dentists get jammed up in tax problems?
I would say the same amount of dentists get jammed up in tax problems as the typical business owner out there. And it's typically the tax problems come down to payroll taxes and not using a payroll service or falling behind in the taxes for the payroll service. That's the typical one that we see.
That's probably, and I could definitely get that. I remember years ago when I did all that. It's easy to forget a quarterly form or something that is automatically provided to you when you use one of those services. Are there any payroll services that you recommend, or your firm probably does those themselves? Is that correct?
No, we recommend a number of different. From the big boys to the small local ones. It comes down to a matter of preference, what you're looking for.
Sure.
In that business, you kind of get what you pay for typically.
Those are all legal problems. Do you find what are the ethical problems that sometimes arise from taxes?
Well, if you're doing things and you're writing things down that are not correct, then you have an ethical problem. Okay.
I mean, how about it? What's the number one example for a dentist in that realm that you see?
Not accurately tracking what their expenses are. That's it. And then kind of flying by the seat of their pants at the end of the year. So when we work with a client, we work with them throughout the year so that doesn't happen. And more often than not, when people fly by the seat of their pants, they're actually under calculating what their expenses are versus over.
I think one of the things that you said is so valuable, and that is you're in touch with them year round, not just once or twice a year. Because I tell you, from previous firms that I've had, or really just a sole CPA that you ran into in November, December to prepare for the the end of the year. But what if you go the first 9 months and you're absolutely you're killing the business, and you didn't increase, maybe your estimates, or, you weren't increasing what you were saving for. Like, I think that's, today my accountant, always has an eye on what I got going on and saying, hey, you know what, you're doing a little bit better this year. Like, you need to better prepare for, April 15.
A bigger tax bill.
Yeah, I mean, it's
basically
possible. I mean, I remember I once had to borrow money to pay my taxes, and that's pretty tough because you borrow your money to pay your taxes on April 15th, but then you also have your first quarterly payment that's due at the same time. Like, that's a rough spot to be in, and I've been there. It's been quite a while, but I've been in that spot. So any words of wisdom for avoiding those kinds of scenarios other than just stay in touch?
Well, do a tax plan and skip that payment.
Well, I
like his idea though too. We're just keeping an eye on stuff and communicating and say, hey, maybe is there some piece of equipment or is there something else we can do to try to wiggle that other number down? Because if you don't do nothing, the old saying, if you fail to plan, you plan to fail. So
right, and you typically know the client that's putting money away. Versus the client that's pretty much spending everything that's coming through the door. So you know who you have to watch a little closer. And as long as you set them up with the correct estimates and you know what kind of client they are, you have those conversations, everything should run smooth.
I'm a little bit of both. I max my 401k out, which is, being the owner is a good advantage to it. But after that, yeah, I'm all right spending the rest of it. I like nice things, Yeah,
there's nothing the matter with that.
Speaking for a friend, of course. You said you were a tax coach. Can you tell us what a certified tax coach is?
Yeah. So to become a certified tax coach, after I was a CPA, I spent 3 days of training in San Diego, and then I go for about 40 additional hours a year in tax planning training every year, in addition to the regular CPE that I go through. So, and it's a group of people. We look for different ways that you can save people money that are within the tax code. So, a guy like Donald Trump or Warren Buffett and Bill Gates, they have teams of attorneys and number crunchers to help them save taxes. We just do it on a small level.
That's awesome. It's almost like it's like a consultant. For many, many years, I think one of the things that I don't know, sometimes it's ego, but most of the time is it's like you don't know what you don't know. And, you don't really know what a dental consultant may be able to do for you, because the truth of the matter is us dentists, we're really scientists, Craig. I mean, we're not business people, and I'm sure you're shaking your head going, no kidding. But we went through 8 years of college in the sciences, never took a business course, never did anything like that. But, when we get out, hell, it's not that hard to trip over $1 million business. And there's a lot of ramifications that go along with that. And finding someone that, can truly help you and guide you along the way. I look at that certified tax coach to me is really like another consultant for my practice. It's like, hey, let's use their brain power because, I like this. I like the one saying, I don't know who made it, but none of us are as smart as all of us.
Most definitely.
So the use of a good dental consultant, a financial consultant, a tax consultant makes, and I think the young dentist too looks at that and say, oh my God, it's just someone else got their hand out. I got to pay every month. But if you find the right ones, like you said, the ROI shouldn't be like 10%. Like it should be huge multipliers of those fees.
The wonderful thing of when you work with a tax coach or someone like myself is you know what your ROI is going in, okay? So our typical first year ROI is going to be 300 to 400%. So that's before you actually pay us $1, you're going to know what that is. So, and in our case, when we do a tax plan, it's 100% refundable, and nobody's ever asked for their money back because it's instant gratification. Right.
What inspired you to write a book? I'm just looking here on Amazon, Secrets of a Tax-Free Life. I mean that title gets my attention. What inspired you to write a book?
I co-authored that with about 9 other people that are in a group that I'm part of, and we were just looking to do something that was a little bit different, gain some credibility, and put something out there. And I think it's been about 3 or 4 years since that's come out.
Awesome. So our listeners can find it at Amazon and all those kinds of places?
Yep, it's available on Amazon. Or like I said, my most recent book, 10 Most Expensive Tax Mistakes That Cost Business Owners Thousands, we'll be sending to anybody that requests it.
Whoa. Oh, I like that. Will you share a link with us on the show notes for that?
Oh, definitely. It'll be, I'll give it to you again, but it'll be www.craigcodyandcompany.com/DIW, as in dentist, implants, and worms.
There we go.
Nice. I like free stuff.
I know. Who doesn't like free stuff? Are you kidding?
It's free. It's for me.
Absolutely. Well, we will have that link in. We'll have that link in the show notes. We'll have all your. We'll have all your information and how to contact you. You are open to take new clients, I hope.
Yes, we have clients throughout the country. We just picked up a client the other day out of Oregon. So that's probably the furthest. And I'm in New York. I'm about 20 miles outside of Manhattan. So best way to reach us is via our website. Email is craig@ccodycpa.com, and our phone number is 516-869-4051.
Well, Craig, this has been a great podcast. Thank you so much for coming on. I encourage our listeners to go to the show notes. Get your damn free copy of your book. Learn something. Head to Amazon. Maybe pick up this Secrets of a Tax-Free Life. It looks like it's done very well out there. And really just open up your eyes and do some communication with your CPAs. I think is kind of the main focus here. Hire a professional to do their job.
Yeah, and if you don't have a CPA, get one.
Yeah, and we just spoke to a great one. So, well, from the Dentist Implants and Worms, thank you so much for coming on, and we look forward to following you in the future.
Thank you very much. I appreciate you having me.
You bet. Have a great afternoon.
Take care.
Thanks.
Cheers.
At Boyd's Wine and Spirits on Mount Rushmore Road, we have a variety of wines for you to choose from, red and white. We also have tons of liquors and other spirits, vodka, rum, whiskey. So if you're mixing drinks, or if you just need an ice-cold beer, fresh on tap from the growler station, Boyd's Wine and Spirits has you covered.
Well, that was good.
Yeah. Who'd have thought a CPA would be entertaining?
I hear you, but man, we just went through tax season a little over a month ago, and man, it's all relevant information.
Well, I see it. I mean, there's a time of year where things get kind of locked up, and you can see the stress level on some guys because it's not an easy time of the year for anybody.
I think especially with healthcare professionals and dentists, who deal with insurance, and delayed payments, makes planning even more important.
I'm sure, Gabe, you see this, the failure to plan throughout the year.
Oh, yeah.
Ends in a panic at the end of the year, like, hey, I need to buy an iCAD, I need to buy this or that.
Happens at the end of every year.
But sometimes you've got to get your back into a wall because some of those things are supposed to be delivered before, that they can use that with Section 179, and that doesn't work December 30th.
No, when I was a young rookie sales rep, I mean, somebody'd hand you a check in December, and we'd fill it January, February, whatever, and they'd use it as a write-off. And that Sarbanes-Oxley came around however many years ago, and the accounting rules kind of changed, and it has to be in service. And but when you do talk to, I've got a handful that we'll have a powwow a couple of times a year, and it's like we're looking at doing this, and this over the next 5 years. How do we phase this in so we can take some write-off and not do it all at once? But, when we get to the end, we're not kind of wishing we hadn't bought something else in the beginning. And, those offices run smoother. They're planning. Everything goes well. We're not scrambling in the, days in between Christmas and New Year's to try to throw new stuff in, and a lot of times we physically just can't get enough bodies to go install some of the stuff that we need, and yeah, it's not good.
No. So
did you realize some mistakes that your friend was making?
Well, he hadn't made any mistakes yet, I don't think. But I was asking for a friend anyway.
That cost aggregation thing, that's something that's kind of hit our radar in the last 5 years, and that is a tremendous write-off on new buildings and remodels. I don't quite understand all of it, but some electrical circuits are only in that building to feed dental equipment, and those can be depreciated, wrote off a lot faster instead of waiting 39 years. So, but
a lot of that too has to start in the planning phase too. Like you've got to get the electrician to basically invoice.
It's all baked in the cake.
Yeah.
And it's something that you can't go back in after it's up and done. You cannot figure that out. But if it's accounted for properly, and I think that's what you see now with some of these ginormous buildings that are going up. And then the dental world is somewhere $2, $3, $4 million.
A lot of dough.
You can't wait 30 years to write all that off. You've got to get a little faster return on that.
Lot of dough.
Yep.
Well, that was a good podcast. Listeners, please give Craig Cody
feels kind of good to be back in here.
Oh my God, it does. Get him to send you a damn book. Use up some of that CPA's dollars. Get him to send you a book. Figure it out. If you need his services, you know how to get a hold of him. Well, oh shit, we forgot to ask him for a song. What about like Money, Money, Money?
There you go.
Did we do that before? You know,
I don't know.
Yeah.
I know the song.
Do you?
Yeah.
You'll be able to figure that out?
Yeah.
Okay, let's do that.
All right.
Works for me.
Well, from Studio 1A, downtown Rapid City, and Boyd's Wine and Spirits, we all thank you for listening. We couldn't do it without you. And
hit the subscribe button and like us.
Yeah, give us a few stars. Preferably 5, but give us some stars. Come on.
Even if you tell us we're bullshit.
What will it hurt? What will it hurt? So thanks for listening, and we'll catch you next time.
Thanks. Cheers.
Give it up, give it up, give it up, yeah. Got to have it. Some people really need it. Give me cash money. I need. Keep me living. How many days have I heard you say? Don't let money rule you. How many days have I heard you say? Don't let money fool you. No. Yeah. Got to have it. I really need it. Save your soul, don't sell it for that mean. People don't let money change you. All my time, I keep telling you, people don't let money. Keep on changing, changing up your mind. You keep on changing, changing up your mind. Telling y'all, people don't let money, don't let money change you. All my time, I keep telling y'all, people don't let money, don't let money change you. All my time, yeah. Keep on changing, changing up your mind. Oh, keep on changing, changing up your mind. I'm telling y'all, people don't let money. Don't let money.
Thank you for listening to Dentists, Implants, and Worms, helping you navigate the world of dentistry one vodka soda at a time. If you'd like to know more about the hosts or the show, check out dentistsimplantsandsworms.com. And be sure to find us on Facebook and Twitter. For Justin Moody, JustinMoodyDDS.com. For Jeff Smith, JeffreyAllenSmith.com. And follow Gabe Olson on Twitter at GabeO21. Dentists, Implants, and Worms.